Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. Today is Tuesday. It's August 2nd. It's about 8 a.m. in the morning. Wow, it's 8 o'clock sharp. Market's going to open up in 90 minutes to be exact with you. Excuse me. Got a lot of negative data waiting on the market. Nancy Pelosi decided to visit Taiwan, and China is up in arms about it. They're taking that very personally. So the market is cooling off. But honestly, I think that's just an excuse. I think momentum levels have gotten so high that the market needs to cool off. I was showing everybody 20-day breakouts versus 20-day breakdowns yesterday. And at one point during the day, the number was like 580 versus 20 or 30. Let's see what it is. Yeah, it's like 252 now. So typically when these numbers get out of whack, you tend to see a market balance come off because, anytime you have 20-day breakouts, you have 20-day breakdowns and so forth and so forth. So this is a really good little indicator to determine if markets are getting out of whack. How many stocks are making 20-day breakouts versus breakdowns. And when you see this number get to like 600, and this number, let me go back one day actually. There it is. 547. And remember, I was looking at it during the day, so it could have been 87 or 37. But this looks right. 547 versus 38. This is a day ago. This is over the weekend. And I was telling you guys that this number can't sustain itself. Now that number is 252 versus 38. And I'm willing to bet you when the market opens, that number is going to look a lot more even. And eventually, over the next few days, if the market does continue sagging, you're going to see this number and this number match. Usually, there's not a big, like for example, look at 90-10s. These are 90-day breakouts, 10-day lows, 90-day breakdowns, 10-day highs, 2, 1. Sometimes you'll see 10, 20. But when you start seeing 250 or 500 versus 30, things are a little bit out of whack. And I'm glad I have this time back machine so I could take you back and show you. And if you go back, see 554, 403, 99. Do you see that? Going back July 26th, let's go back another day. 160. That's not crazy, 144. But when you start getting 540 versus 38, that's a little too much. So again, the number goes up and down, but when it gets a little out of whack, that's when we have to pay attention to it. I really like Stock Fetcher because it has that little filter there. So let's talk a little bit about global economy, what we can expect. So today we have the JOLTS report, not a major report for Fed data. Last week was a huge report for Fed data. We had FOMC, we had GDP, we had everything thrown at us. This week, though, we do have international trades in goods and services, and we have the employment and jobless claims. Not too worried about employment or jobless claims. They've been ticking up a little bit, but not anything to really get bent out of shape about. International trades in goods and services I am concerned about because this will reflect on the supply chain issue. And I'll talk about this as we get a little further into the season or into the week, excuse me. In terms of earnings, AMD today. It's interesting because the markets are already down. AMD is opening lower. And I believe the stock is reporting after the market closes, but I would keep track of the stock during the day, and I'll explain to you why. Semiconductors, while they were really strong about a month ago, they've actually weakened out pretty good lately. Matter of fact, and that's where we're at right now. The Nasdaq is down 100, Dow's down about 200 or 173. But if you look at the SMH, I want to show you this. I've been really carefully looking at the level, here, let me show you this. The pre-breakdown level right here. That's the pre-breakdown level. That's the resistance level that I'm looking at because after this period, a lot of traders thought we were going to go higher. And what happened was the CPI came out at 8.6 and took us down to new lows, and we're watching the recovery. Now, if you look at XLY, which is the broad tech sector, you will notice, or consumer discretionary, that's that area right here. Right here. You'll notice that we're already above that area. And I do think we're going to go back down, but that's not the point I'm making. And look at tech. Both tech and consumer were above that level. That's that level right here. That's that resistance level that I'm really cautious about right now. And they both went higher, and I did warn you that I said they're probably going to come back down. We're not ready to go higher, and I think we will. I think we're going to undo much of the upside that we've gained in the last in the last week or two. I think we're going to go back into this range because the bond market's in this range. But look at semiconductors. They never went even above that range, and semiconductors tend to lead tech. See that range? Never got up there. Almost got up there, but not quite, and now it looks like we're turning. Now, we could break above that level on the semiconductors and go higher, but I don't think we will this time around, especially with Nancy Pelosi visiting Taiwan, sentiment shifting, the FANG earnings being out of the way already. I think we're going to start fizzling out a little bit. And I think the report today is not going to be that great. They're looking at a 63% year-over-year increase. That's pretty high on the EPS, and revenue is expected to move high too. I think revenue, they'll do okay, but I think they're going to miss their EPS. So if we're a little bit below 103, expect the stock to go down. Also, we've got Caterpillar today at $3.01, Cirrus Logic, 41 cents, DuPont, 75 cents, Electric Art, 28 cents, FMC, $1.88, Guild, $1.53. A lot of stocks. JetBlue's coming out, Molson Golden, Marriott, Marathon, Microchip, Occidental, the stock that Warren Buffett probably is going to own outright pretty soon. PayPal, Prudential, one of my favorite stocks. I started working at this company back in 1990, believe it or not. Prudential Realty Group. SolarEdge is coming out, SunPower, Starbucks, Uber. Uber. Wynn is coming out. I can't wait to hear what Uber has to say about if they're ramping up. And I want to hear what Wynn has to say when it comes to their Chinese gamblers, because they get a lot of business from China. So it's going to be a very interesting day, and I'll give you a full update on earnings later on. And I also want to see how the Fed data breaks out. Let's talk a little bit about global economy. But again, semiconductors and tech is the weak card right now. And I'm expecting volatility to rally a little bit. And when I get into the sectors, I'll break it down a little more. But let's talk a little bit about global economy. Sorry if I'm a little bit all over the place today, but markets are a little bit over the place. Global shares were mostly lower. As expected by U.S. House Speaker Nancy Pelosi, I wonder if her husband shorted some Taiwan stocks. Wink, wink, going into this. China sees Taiwan as its own territory and has repeatedly warned of serious consequences if reported trip to island democracy goes ahead. Pelosi has said she visited Singapore, Malaysia, South Korea, Japan for talks on a variety of topics, including trade, COVID, climate change, and security. Yeah, I don't know. I don't trust her very much. The Reserve Bank of Australia Tuesday announced its benchmark interest rate for a fourth consecutive month to a 6-year high. It was the third consecutive hike of 0.5 percentage point. Nobody's really concerned about Australia all that much right now in terms of the global economy. I mean, and don't get me wrong, it's important, but not like Europe or Asia or US right now. More than half the companies have reported, and so far numbers have been better than expected, but I got to preface that with the fact that they've been beaten down in expectations. So most of them are really weak, but they're better than expected because their expectations were so low. And again, many companies have warned that inflation is hurting consumer spending, squeezing operations. Businesses have been raising prices to try to keep up profits. Labor Department will release its June survey on job openings and labor turnover today at closely watched monthly employment report on Friday. I'm more concerned about the Friday report. Surge in oil prices throughout the year only worsened impact of inflation, and I think we're going to see some more upside on the energy sector, which happens to still be leading, and utilities and consumer staples are the three on a cumulative strength index: energy, utilities, consumer staples. On the monthly, consumer discretionary and technology are still leading. I think that's going to change. Now, this is that area that I've been talking about. This is that area. Keep an eye on this area and where price is. So I think consumer discretionary and technology are going to come back down to the base. Maybe I'm wrong. Maybe I'm right. We'll see. I know that communication services is already, where is that? It's already almost down there to begin with. Healthcare is holding up pretty well. Energy, I think we're going to see some more upside. I really like consumer staples. And I'm really liking healthcare. And notice they're both here, but they didn't rally hard. They just been kind of slowly going up, and they're also at that rally area. And same thing with consumer staples, and they look like they're ready to go higher. Whereas like basic materials looks like it can cool off. Technology looks like it's just overdone. Consumer discretionary is overdone. But this is the area that happened between May 27th, my dad's birthday actually, and June 9th. That area is the area that I want to see most sectors overcome, and they're having an issue doing it. And what I like about consumer staples is it went up, and then it just kind of started congesting around that area, and is slowly breaking above it. And if you look at financials doing similar, but look at where this is and look at where that area is. Has a lot to go. Real estate looks like it can kind of come up and stay around here, slowly coming up. But look at consumer discretionary, just float up there, and it's above that area. But I don't think it's going to stay, and I don't think this is going to stay above that area. But again, if you look at healthcare, went up here right afterwards, and then just slowly coming up here. I like the slowliness of it. Energy kind of creeping back up. Didn't really have that hump. Had it more of an upslope. But energy, I believe, will come up because now it looks like earnings are better than expected. It looks like we are or were in a mild recession, and we're actually getting out of one, or we're too far away from one to care because people are spending. And even though we've had 2 quarters of back-to-back negative GDP, this is not a typical recession. We can't measure this like a normal recession. It has a lot to do with COVID, a rebalancing and a reversion to the mean after COVID. So inflation is still here, and I think this was a major shakeout in energies, and I think we're going to go up for another count, and I think we're going to go up to the 90, at least the 90 level. So keep your eye on that. I think consumer staples are going to hold on. I think healthcare is going to try to hold on. I think consumer discretionary and technologies where we're going to see the biggest faltering. That's the most vulnerable sectors right now. Now, in terms of stocks, what I would be doing right now if I were you is I would be looking at Enphase Energy or Occidental Petroleum. I think both of these stocks are going to go higher, or Quanta or Lamb Weston. I would stick with energy, utilities, or consumer staples right now. And healthcare is okay too. Healthcare is all right too. Lilly, Humana, but stick with defensive. Healthcare, consumer staples, energies, utilities. As far as the weakest sectors, Royal Caribbean, Norwegian, Expedia, the traveling sector, I would stay away from that sector. I don't think it's going to see any love this summer. Also, I've been bearish about Dish Network for quite some time, and now we have Intel there, but I wouldn't be shorting Intel. But I'm telling you right now, Norwegian, Royal Caribbean, Expedia, if in August we haven't seen a rally yet, I don't think we're going to see one this summer. So that's what I've got for you today. Now, before I let you go, folks, Lance Ippolito, this guy has been so hot, you can't come near him. He'll burn you. I'm just messing around. Seriously, at 1 p.m. Eastern time today, Lance is going to show you his brand new indicator and what it's signaling. He'll pull up charts for commonly held stocks. He'll show you what the indicator is signaling. And if you simply want to use the indicator yourself, he'll show you how to install it on your platform. Seriously, you do not want to miss it. Folks that have started using this indicator, they seem to love it. Follow the link below. It's happening at 1 p.m. Eastern time. Watch the live demo. He's going to give you a full hands-on demonstration. You guys are going to love it. And this is a great indicator with what is going on in the market right now. And Lance, he's been red hot. I think he's had like 11 winners in a row in Blitz. It hasn't been just me that's been hot with Pattern Trader. Lance has been hot too, and so has Jeff. But you got to check out this indicator. 1 p.m. Eastern time. It's happening today. You snooze, you lose. One tip can change how you trade the markets. One tip. Make this be the tip. You want to check out Lance. And he's a great guy. He's very helpful. He's there for you every step of the way. Follow the link below. Don't miss out. Bye, guys. I'll see you soon. Send me some love letters. I haven't heard from you in a long time. Bye.